Check, 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 checky, check, mic, check. Good morning, good afternoon, good evening, troops, wherever you are in the world, and welcome to the channel Mark. That's me, my words, where we look at trading, traveling, and training. Before I do get into today's video, I would like to ask you all to please hit the subscribe button down there, give us a thumbs up, and try and help us build the channel. Monumental moment yesterday, troops. We broke through, smashed through the 100 subscribers barrier. So now I've just got to figure out how to get the custom URL. I would like to thank each and every single person who has hit that subscribe button so far. You have been amazing. Thank you very, very much. Let's continue to grow together as we also aim to make some money, learn and share our worldly experiences. Okay, enough of that. Moving on to today's summary of yesterday, the 16th of March. Quick look at GME first. We did get hit at the very beginning of the day. It wasn't unexpected for me. I was anticipating something like this. You can see here quite aggressively compounded down. I do think now that the hedge funds are starting to get a little bit more desperate and starting to employ some really aggressive tactics. What I did like was we tested this support here at 175, not once, but twice, and we managed to maintain that. And then for the rest of the day, generally speaking, look, you can see that there we get the upward momentum. We did get as high as, where are we? The high point, over 200 anyway. It was over, it was 220 something. I think around there, 220.19. Is that the highest one? 217. Yeah. So around 220 was the high point of the day. Another thing that I did like yesterday was the consolidation there in that channel there. And it looks like we are sitting pretty at around $200 for a level of support. If I just draw that in there, I know the chart gets a little bit busy, but it is what it is. Where are we? Around 200. Yeah, around there. I would expect, you know, to hold that. We did look comfortable in that channel there. Let me just move that consolidation line. I guess you could include all of that. It's a little bit, it's much of a muchness. So there we are for GME, and we closed 208.17, down 5.5%. Looking at the previous day, okay, a better day. Looking at the market overall, if you look to the right here, every single ticker that I am highlighting or following is red apart from SLGG. So generally the market overall was red, not too fuss there. I think if we can maintain that $200, it will give us a good area of support. RSI, again, into when we look at this consolidation here, the RSI does look nice and calm. It only touched the overbought zone you know, a couple of times and quickly came back in. Similarly with the oversold zone, never really broke out of that. So all in all, you know, a good day, a solid day, consolidation day, shall we say. Volume extremely low, 35.5 million against an average volume on a 10-day of 58.27. So it is what it is. You know, we do need that volume to pick up to bring back the volatility. As we say here, volume drives volatility. Volatility drives the price. Price, Mark. So that's it for GME. Quickly moving on to AMC, where we had, again, you know, a few incidents throughout the day that I noticed. We did get the same as GME. We got hammered at the very beginning, all the way down there. You can see that channel quite clearly. What we then had was a double bottom, which gave us a little push. We then hit this line of resistance here at around 13.19 once, twice, 3 times, 4 times. We did break above it there, but we were soon pushed back under it. So that was a level of resistance yesterday. Again, pretty much consolidating in a channel here. I get another nice double bottom here, look, where we, if I just zoom in there, one there, one there. Again, this is a 1 minute chart, so you have to take it in context. Do expand out and look at the bigger picture as well. But that did give us that leg up there, which you would expect to see with that pattern, generally speaking. Again, testing the resistance. What I did like was we stayed in this channel 1272 to 1319 area. So again, another, you could say consolidation zone. It was good to see. Another double bottom here, which gave us a little push into the end before we finally settled at 1302 on the close, down 7.26%. Again, some people may be saying, oh, it's down 7%, Mark. You weren't saying that yesterday when it was up 20 odd percent. So again, look at the bigger picture, put it into context. Over the 2 days, your average is maybe, 19% up, something like that. So you can't sniff at that. Yes, you're going to get red days. Yes, these hedge funds are going to get more and more desperate. Yes, it's up to you where you get in and where you get out. Absolutely, I say that all the time here. You get in with what you're prepared to lose because you may lose everything, and you get out when you have made what you feel is enough for you, what you feel you are happy with. Don't let anybody sway you. Don't jump on anybody's hype train. Don't jump on my hype train. I'm holding a position in both. I've got my strategy, which is in place. I got nervous, I must admit, especially on GME when we started dropping down to that 175 area. I did wonder if we were just going to then start free falling as more and more people got their stop loss hit or decided that that was it, they couldn't take it anymore. So, do what's best for you. Don't listen to anybody else. Do what's best for you. I'm just here to share what I've seen on the charts. So, again, I think it was a strong day for AMC. We did get this golden cross here on the 1 minute chart towards the end of the day. RSI, we tested the oversold zone, overbought zone 2 or 3 times, quickly back in. Oversold just once there towards the end of the day, once there at midday. But overall, a consolidating day. Again, volume-wise, not the highest it's been. We had 125 million. I think yesterday we were over 200 million. So just to put it into context, over the 2 days, you can average it out. The average volume here on a 10-day basis is 152 million. So going forward into today, what am I expecting? More shenanigans. I do believe that both tickers are on the SSR list. For what it's worth, some people say it doesn't really count for much. Personally, I like it. It gives you, it gives a degree of protection to the ticker. So we shall see. We shall see what happens. I would like just to give a quick shout to the Reddit guys for GME and AMC. Really, if you have got time, go and read. Go and read some of their due diligence. It's well worth it. What I'll do is I'll stick these links in the description below. Go and have a look. There's some really good stuff in there. There's some funny stuff in there. I was looking at GME yesterday. There's some really good memes going around, which I made. Look at this. 10:30. Algo drops another 3 million naked shorts. This is the. I think this is the guy from Citadel. The main man from Citadel. Apes celebrate it as a fire sale. It just. I think it's brilliant. But there's some really good. Some good due diligence on here. A guy called Rensol and Hey It's Pixel. Go and look them up. Read what they've got to say, make your own mind up, and take it for what it is. Do your own due diligence, always. So I'll link these in the description below, and on AMC and GME. Pre-market is showing on this platform at $13 for AMC, so around about the close of yesterday, and we are looking at 205 for GME. Again, I tend not to get too excited about pre-market and post-market because it's limited access. Okay, troops, so that's what I've got for you for the summary of yesterday. Unfortunately, I won't be able to live stream today. I do have commitments outside of you fantastic bunch of people. As much as I would love to sit here all day chatting and watching the stock market live, I'm unfortunately able to do so. But I will be back this evening with a wrap up of today's action. So in the meantime, wherever you are, stay safe, look after each other, and see you soon. Cheers, troops.